the Vietnamese Dong is back in the spotlight, and what is happening right now could become one of the most closely watched currency stories in Asia. Investors, economists, and currency speculators around the world are paying attention to Vietnam as the country's economy continues to expand at an impressive pace. Questions are growing louder every day. Could the Vietnamese Dong become stronger in the future? Is a revaluation possible? What do the latest economic numbers tell us? And most importantly, what could all of this mean for those who have been following Vietnam's remarkable economic transformation? Today we are taking a deep dive into the latest developments surrounding the Vietnamese economy, the Vietnamese Dong, and the growing discussion about the future value of the national currency. Vietnam enters the second half of 2026 with significant momentum. The country remains one of the fastest growing economies in Asia and continues attracting global attention from major corporations looking to expand manufacturing operations and diversify supply chains. According to recent economic reports, Vietnam's economy expanded strongly during the first quarter of 2026, with GDP growth approaching 8% year over year. Industrial production, services, retail activity, exports, and foreign investment all contributed to this strong performance. One of the biggest reasons for optimism surrounding the Vietnamese economy is foreign direct investment. Companies from around the world continue investing billions of dollars into factories, technology centers, logistics networks, and infrastructure projects across Vietnam. During the first quarter of 2026 alone, registered foreign investment increased dramatically compared with the same period a year earlier. These investments are creating jobs, increasing production capacity, boosting exports, and helping Vietnam strengthen its position as a global manufacturing powerhouse. Vietnam's export sector remains a major engine of growth. The country continues supplying electronics, machinery, textiles, footwear, furniture, agricultural products, and numerous other goods to global markets. International companies increasingly view Vietnam as a strategic production base because of its skilled workforce, favorable trade agreements, and competitive business environment. These advantages have helped Vietnam maintain strong export growth despite challenging global economic conditions. As economic activity expands, discussions surrounding the future of the Vietnamese Dong naturally become more intense. Many investors believe that a stronger economy should eventually support a stronger currency. This assumption has led to widespread speculation regarding the possibility of a Vietnamese Dong revaluation. However, understanding how currencies actually work is essential before jumping to conclusions. A currency revaluation occurs when a government or central bank officially increases the value of its currency relative to foreign currencies. Unlike a freely floating exchange rate that moves according to market forces, a revaluation is a deliberate policy decision. Historically, countries only pursue such actions when economic conditions strongly justify them, and when policymakers believe the benefits outweigh the risks. In Vietnam's case, the situation is more complex than many online rumors suggest. The Vietnamese government has long pursued a strategy focused on export competitiveness. A relatively stable and competitive currency helps Vietnamese products remain attractive in international markets. Since exports play such a critical role in economic growth, policymakers generally prioritize stability rather than sudden appreciation. That does not mean the Dong lacks long-term potential. On the contrary, many of the fundamental drivers that support currency strength continue moving in a positive direction. Economic growth remains solid. Foreign investment continues flowing into the country. Manufacturing capacity keeps expanding. Infrastructure development is accelerating. Consumer spending is rising. Tourism is recovering. These trends create a foundation that could support gradual currency appreciation over time. Another important factor supporting optimism is Vietnam's continuing integration into the global economy. The country has signed numerous trade agreements that provide businesses with access to major international markets. These agreements encourage investment, stimulate exports, and strengthen Vietnam's role in global supply chains. As international trade expands, demand for Vietnamese goods and services may continue increasing, creating additional support for long-term economic development. The technology sector represents another major opportunity. Vietnam has become increasingly attractive for electronics manufacturers and technology companies seeking alternatives within Asia. Production facilities continue expanding, and high-value manufacturing activities are becoming a larger share of economic output. This shift toward more sophisticated industries can help increase productivity, boost incomes, and improve economic competitiveness. Infrastructure spending also remains a major priority. Vietnam has launched numerous transportation, energy, and logistics projects designed to support future growth. Better infrastructure reduces costs for businesses, improves efficiency, and enhances the country's attractiveness to investors. The government has also targeted significant financing for infrastructure development, reflecting confidence in long-term economic expansion. Despite these positive developments, challenges remain. Inflation has become a growing concern during 2026. Rising energy prices and global geopolitical tensions have contributed to higher costs throughout many economies, including Vietnam. Recent inflation figures have exceeded government targets, creating pressure on policymakers. Higher inflation can reduce purchasing power and complicate efforts to maintain currency stability. Global uncertainty also presents risks. International trade conditions remain unpredictable, and slowing growth in major economies could affect demand for Vietnamese exports. Vietnam's success has been closely linked to global trade, meaning external developments continue playing an important role in shaping economic outcomes. Policymakers therefore face the challenge of supporting growth while protecting the economy from international shocks. Recent reports indicate that Vietnam is experiencing a trade deficit in 2026, partly due to increased energy import costs. While officials expect export performance to improve later in the year, this situation highlights the importance of maintaining balanced economic growth. Trade balances, foreign reserves, inflation, and capital flows all influence currency dynamics and can affect expectations regarding future exchange rate movements. Many online discussions about the Vietnamese Dong focus on extraordinary exchange rate predictions. Some claims suggest dramatic overnight revaluations that would instantly transform the value of the currency. Such scenarios receive significant attention on social media and video sharing platforms. However, there is currently no official evidence supporting claims of an imminent large-scale revaluation. Financial experts generally expect Vietnam to continue pursuing exchange rate stability. Stability provides businesses with predictability, supports exports, and helps attract investment. Rather than seeking a sudden increase in currency value, policymakers are more likely to focus on maintaining economic growth, controlling inflation, strengthening financial institutions, and expanding productive capacity. For long-term observers, this may actually be good news. Sustainable economic progress often produces stronger results than dramatic policy shifts. Countries that achieve lasting prosperity typically do so through years of investment, productivity gains, educational improvements, infrastructure development, technological advancement, and sound economic management. Vietnam's recent performance suggests that many of these ingredients are already in place. GDP growth remains among the strongest in the region. Industrial production continues expanding. Retail sales are rising. Foreign investors remain interested. Manufacturing activity remains robust. Tourism is recovering. Public investment projects are accelerating. These developments contribute to a positive long-term outlook. The World Bank has noted that Vietnam entered 2026 from a position of strength relative to many regional peers. Although growth may moderate, compared with exceptionally strong prior years, forecasts still point toward expansion rates that many countries would consider highly desirable. International institutions continue viewing Vietnam as one of Southeast Asia's most promising economies. Looking ahead, the future of the Vietnamese Dong will likely depend on several key factors. Economic growth must remain strong. Inflation needs to be managed effectively. Foreign investment should continue entering the country. Export competitiveness must be preserved. Infrastructure projects need to be completed successfully. Financial stability must remain a priority. If these conditions are achieved, confidence in the Vietnamese economy could continue strengthening over the coming years. For investors watching the Vietnamese Dong, patience may prove more valuable than speculation. Economic transformations rarely occur overnight. The story of Vietnam's rise has been built through decades of reforms, investment, industrialization, and integration into global markets. That process continues today, and many analysts believe the country still possesses significant growth potential. Whether a formal currency revaluation ever occurs remains uncertain. What is certain is that Vietnam continues demonstrating economic resilience at a time when many countries face substantial challenges. The country's ability to attract investment, expand exports, build infrastructure, and maintain strong growth has positioned it as one of Asia's most closely watched economic success stories. As we move deeper into 2026, investors will continue monitoring inflation data, export performance, foreign investment flows, central bank policies, and global economic conditions. Every new report will provide additional clues about the future direction of the Vietnamese economy and the Vietnamese Dong. The biggest takeaway is simple. Vietnam's economic fundamentals remain considerably stronger than many people realize. While there is no official announcement of a Vietnamese Dong revaluation, the country's long-term growth story continues gaining momentum. Strong GDP growth, rising foreign investment, expanding industrial production, improving infrastructure, growing consumer demand, and increasing global integration all contribute to a positive outlook for the future. The Vietnamese Dong may not experience the dramatic overnight changes often discussed online, but the broader story of Vietnam's economic rise remains one of the most compelling developments in the global economy today. For investors, economists, and anyone interested in emerging markets, Vietnam will remain a country worth watching very closely in the months and years ahead.